Hey, good morning, everyone, and welcome to the Pivot Boss pre-market report for Wednesday, November 8th, 2017. I'm Frank Ochoa, aka Pivot Boss. Here's a look at the daily time frame of the ES. What you'll notice here is price continues to hold at highs for the most part and continues to hold above the previous month's high. Sitting here in a fairly low range day, not too high. I mean, we've been averaging about 15 handles a day of range over the last 10 sessions, and right now we're sitting at about 7.75 points of overnight range. Overall, there was a failure to hold above 25.90 yesterday, kind of pulled back, and since then we've tested the previous session's low and bounced right back up. Typically speaking, in an uptrending market, a failed new low can be a sign of a new high to come. But in this case, we could see a little bit more pullback. We'll see what happens here, but overall, as I mentioned before, any pullback could be a great opportunity to continue to buy the dip and look to return it to new highs. Based off the previous session's key range here, there is a 100% estimate that puts you at 2600 as the next upside target should a continuation occur. So we could be looking at 2600 very soon. But again, not the best conditions here for a swing trade, but there have been very nice overnight key ranges to mark for key levels. So we're going to continue to base our trading off the intraday, overnight impulse moves. Here's a look here at the NQ. The NQ here has been trending higher, really has not provided any pullback at all to speak of. There was one attempt to push lower here and hit 6,200 and bounced, and since then it's been straight up. Now we have kind of an inside day working out, very narrow 2-day range here. Again, any pullback, even if it's a one-day pullback like this, could provide the next bounce opportunity to new highs. So again, a pullback would be welcome. Right now, we're not seeing much of that at all, so you have to continue to be patient. With regard to crude oil, this one has been very, very active lately, very bullish overall. But in terms of intraday activity, we've seen a pickup of pace and tempo in the intraday time frame. So it's been making for some pretty good short-term trading opportunities on an intraday basis. In terms of this one, obviously I mentioned before, acceptance above 55 suggests that there's going to be a new price distribution that develops from 55 to 60 and as high as 62. And so we could see a new 7-handle range develop at highs where it could become the new price distribution for a while, which means on the first rotation in the 55s, it could provide a decent opportunity to defend and stretch it to 60. We'll see if we get that much of a pullback here soon, but again, as long as price holds above 55s, we could be looking at a push towards 60. Now, taking a look here at GC, we're in this range here, and we've been in this range for 3 weeks now, or almost a full 3 weeks. And this range spans again from 1285 down to about 1262, 1265. This range, if you look at a 10-day range basis here, is about as narrow as it gets. And usually when you see it get that narrow, you see a significant breakout ahead. Again, right now you have to be patient for expansion out of this range. Things have been rounding off down at the bottom, and again, I mentioned 1285 being a big-time level there, that if we start to see that breakout, we could see a stop run day that leads this thing back toward recent highs, which would be between 1306 and 1310. So we could be looking at a nice squeeze ahead, but again, a breakout in any direction could be significant. And the intraday trading within the boundaries of this range, again, have been pretty good compared to normal. But eventually, once we get expansion from this narrow range, it could be significant. So continue to watch the boundaries very closely. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck and trade well.